Hello and welcome to this strategy video. In this video, I'll be taking a look at moving average crossover systems, which are one of the oldest and most reliable systems out there. Now, a moving average is a very basic technical indicator that allows for the calculation of price over time. So, in other words, you basically, when you plot the moving average at whatever point you are on the chart on the line, say it's 100 moving average and it's right here on that line, then that's the average price over the last 100 candles. Without getting into the mathematics, a lot of people will use moving averages to determine trend or even entry signals. So on your MetaTrader 4, you can go to Insert Indicators Moving Average, and exponential is the preferred method, although there is smooth, linear, weighted, and simple. Exponential is simply a mathematical formula that puts a little bit more weight on the most recent candles. It's a little more quicker to move. So when I click on that, you can see that in this case it's a red line and it goes down, and you can notice a couple of things. You can notice that the downward pressure signifies that prices are falling over time. It's not a real surprise. You can look at the chart and see that, certainly. But one thing that I would mention is that as we touched it down here, it acted as dynamic resistance, and that can happen in both directions. Now, crossover implies that you need to have two. So I will make the 50-day crossover or moving average in blue. And you can see that this entire time they have been spread apart, and they continue to kind of keep a nice equal distance, and that's a very good sign. That's a sign that the last 50 days average has been steadily declining along with the last 100 days average, and that's an excellent sign of a downtrend. And you can see here we had crossed the 50-day exponential moving average, went below the 100-day moving average, and that shows that the downward momentum in the shorter time frame, the 50-day time frame in this case, was starting to pick up bearish pressure, and it was a sign that the trend was changing. Now, there are a multitude of ways you could have gotten into this trend, but this is a very basic way. It tends to be proven over time. You do have to deal with a lot of pullbacks, but it is not until this crosses again that you would get out. So, for example, you would have gotten in all the way up here, and you would still be short of this pair. Now, down here, you can see that we had a signal to buy because the 50-day moving average, the shorter time frame, started to gain upward momentum, and you would have closed out here. So there are traders that will actually go long here, go short here, go long again when they cross. Now, there are a couple of inherent issues with moving average crossover systems. Number one, you need a trend, and you do get whipsawed from time to time. But the idea is, for example, if you take a small loss here, you will get a couple of these throughout. In this case, on the daily chart, you'd have to say throughout the year to make up for that. You know, you get a massive maybe 12 or 15, 20% gain here after a small 1% loss. In the longer term, it has been shown statistically that moving averages do work. Now, that's not to say that moving averages aren't used on shorter time frames. It's just that, like everything else with technical analysis, it's much easier to trade and much more reliable off of shorter time frames. So you could take the two same moving averages, and 50 and 100 are very common ones, and you can see that they were giving you the same signal on the 15-minute chart for that matter. Now, they obviously would have crossed a couple of times as well, but on shorter time frames, and you can see that it's been, you know, a little bit more volatile. But even there, you have the opportunity to make some money. You do on these shorter time frames, on the sell signal here and the buy signal here, you give up a lot of gain sometimes, so you do have to be prepared for that. It's not that they can't work, it's just that typically you need a shorter time frame. Common ones would be the 10-20 crossover system, probably one of the oldest systems out there. It goes back to the early days of stock trading. So let me go ahead and zoom back in here, and you can see that it's a little quicker to move. you had still profitable signals here. So moving average crossover systems are definitely a very viable way to trade. And you just have to be able to deal with the volatility that comes with them. But they give you an idea of where the market may be going longer term.